Now it's time for Global Insight, where we connect with people from around the world on issues making headlines. Markets around the world are closely watching China's second largest property developer, Evergrande Group, which has struggled to settle its interest payments in recent weeks. With $300 billion in debt and thousands of investors, suppliers and contractors, as well as home buyers in limbo, there have been growing concerns that if the company buckles, it could bring down China's entire financial system, also marking an end to its relentless debt-fueled model of economic growth. Today, we discuss what the recent developments tell us about China's state-controlled economy and the future of its growth. For this, we're joined by Mattie Bekink, China Director of the Economist Corporate Network. A very warm welcome to you, Mattie. Thank you for joining us today. How are you?
I'm wonderful. Thank you for having me.
Right, well, there's a lot to talk about here. And, well, Evergrande, the company's debt situation hasn't been showing many signs of stabilizing in recent weeks. Do you think it's possible to contain this problem, and what do you think are the options right now?
Well, that's a question that I think a lot of people would like to know the answers to. The simple answer is that Evergrande is running out of options as a particular company. It's already tried to cut prices to offload housing stock, and that has not enabled it to alleviate its liquidity issues. So it's not going to alleviate its liquidity issues from within. That means the only option for Evergrande is to look outside. As you alluded to, we've already seen it being unable to make interest payments. It is shouldered with an unimaginable amount of debt. The number just seems too big to kind of wrap your mind around, over $300 billion. The other issue to keep in mind, however, is this has been a long time coming for Evergrande. This is not something that kind of sprung up overnight. As a property developer, Evergrande, I think, is emblematic of some of the larger challenges in China's property sector, which I know we'll discuss in greater detail moving forward. But to address how it can move forward now, what we expect to see is that the company will not be allowed to collapse entirely just because of the risks that poses to China's financial system, as you've alluded to. But we certainly will see some parts of the company probably collapse or undergo serious restructuring.
And while the company certainly has expanded exponentially, it seems, to sectors other than property development, and well, how did the company get to this point, though, of racking up that massive debt?
It's a fascinating issue to look at, actually. So, Evergrande's debt load now is 56 times higher than it was just a decade ago. And it has amassed this debt in a number of ways. The main issue has been its aggressive expansion. It has built some 600,000 homes across China annually. But as you alluded to, it's also expanded far beyond its core businesses. It's built, for example, a water bottle company, which it later sold, created an electric car company, and a massive football stadium, and kind of borrowing to increase production of housing projects and kind of spur construction without kind of balancing its sheets, essentially, is how it got here. The reason that Evergrande and other property developers in China are in trouble now is that the government late last year tried to impose some discipline and kind of put limits on the amount of debt these companies could carry. And so Evergrande is essentially running up against those limits and those the kind of discipline imposed by the government.
Many Chinese companies certainly have been scrambling to get their finances in order with the government restrictions imposed last year. But, well, for now, many have compared this Evergrande crisis to the Lehman Brothers scenario seen more than 10 years ago. How worried are you about the contagion spreading globally?
On the one hand, we're not that worried about the contagion spreading globally, except so far that the instability will lead to probably hesitancy on banks releasing credit within China, which then has ripple effects globally, particularly on maybe commodity prices and luxury purchases, things like that. Because at the end of the day, most of the debt is internal to China. Of the $300 billion US, it's some 21 billion that is external creditors. However, the task of tackling this debt, not just Evergrande's, but the property sector more broadly, often seems interminable in China, and actually it does remain crucial for the country's long-run economic development, including, of course, the growing ranks of global investors with exposure to Chinese stocks and bonds. So, for some time, the government has been insisting that it wants market discipline and a transparent process for letting firms default without blowing up the financial system. And in essence, that is the challenge of Evergrande and some of the other big property players that we're seeing now. There are real risks to both financial and social stability in China, which is why everyone is watching this case so closely, including the government. We foresee at Economist Intelligence that the government will certainly try to protect the core businesses, whether through kind of acting as a broker and allowing state-owned enterprises to come in and handle portions of the business, or focusing on keeping kind of the real estate portions of Evergrande's empire intact. Just for perspective, I think one of the interesting pieces of this whole conversation is what it shows about kind of the challenges and the systemic risks to China's financial system overall. I mean, I think it's interesting if part of what makes China's financial industry so daunting is its sheer size. Banking assets have ballooned to about $50 trillion. And they actually sit aside a large system of shadow finance, which the government has also been trying to crack down. And total credit extended to firms and households today is about 287% of GDP, which is in comparison with 178% of GDP a decade ago. To put that in perspective, non-financial sector owned debt in America, in the United States, is about 146. So it's significantly higher. So this is a really big structural challenge to China's economy. How Evergrande is managed moving forward will be consequential, not just to China, of course, but to how China continues to operate in the global system.
And while China's economy is state-controlled, of course, and while many have been watching how the government's going to respond to this, and many believe that Beijing is trying to make an example out of this scenario as well. I mean, what are your thoughts on this? How do you think the authorities are preparing to respond?
I will open by saying I have no insights directly into how the Chinese authorities are thinking about this, because that process, again, underlies one of the aspects of China's economic system overall, that it's quite opaque. However, if history is any guide, the government, although it has spoken about wanting to allow default without blowing up the financial system, it doesn't want to see social and financial instability or contagion. The resulting liquidity pressures on interbank lending on the property sector, which is very key to China's economy. It's been a big portion of the growth in China, but it also represents a large portion of household assets. A significant number of common investors in China have invested in the property market. So if that were to be allowed to completely collapse, there would be huge implications for the government and for the country. So they will try to do what they can to limit, I think, the impact of Evergrande, while, as you said, where we are now indicates that they're not going to kind of completely sweep in a too big to fail situation and rescue it entirely. So in that regard, it might be a warning point. However, if you look at the limitations imposed already last year, the property sector was on notice. And you certainly saw that as early as last September. I alluded to Evergrande's efforts to kind of sell housing stock at discount prices. There were kind of adverts to potential home buyers with 30% off, the types of displays you would almost see in a supermarket to offload excess fruit. So this is not news to the company or to the other companies that have found themselves caught up in this. But even if Evergrande is prevented from a complete collapse, or from key parts of its business from collapsing, the kind of smaller suppliers and parts of the system that are below it might not be protected, and that would actually lead to them to collapse. And so there could be implications there. And in that regard, Evergrande is not in isolation and could be just kind of the tip of the iceberg in terms of property sector defaults overall.
And well, of course, Evergrande isn't the only Chinese company that's borrowed beyond its means. Countless others have grown and flourished fueled by all this debt. And well, companies like Fantasia and also Sunshine 100 China Holdings, they've defaulted as well on their dollar payments. Is this the beginning of, is this just the beginning of big Chinese property firms defaulting?
It could be. And it is certainly the beginning of a reform in the property sector, which many would say is long overdue. And in fact, this idea of rebalancing the economy kind of away from growth fueled through the property sector as a primary leader of growth, and kind of the growth at all costs model that has dominated China's economic policy for the last few decades. You know, Liu He recently even commented that era is over. You've seen not just, you know, in what's happening with the debt crisis and with Evergrande, Fantasia, these other companies, but the government in the recent months has had a series of policy and regulatory announcements indicating that it is looking to shape kind of the economy and the society for the future. So I do think there will probably be some pain points in the property sector for sure. You know, smaller companies will not get the headlines that Evergrande is getting, or the potential intervention from the government to prevent, you know, serious financial or political, social instability. So they might just quietly default, and you know, that's a real risk. So I do think that we are likely to see further defaults, further restructuring in the property sector.
Problems in the property sector spells trouble for the entire Chinese economy, of course, and a Harvard professor recently published a paper saying that a 20% decline in real estate activity in China could lead to a 5 to 10% drop in GDP. So if the sector continues to see a slowdown and property prices drop, what would be the impact on the local economy?
I think that professor is correct. We have also already, within the Economist intelligence, downgraded our GDP forecasts for China this year, even prior to Evergrande's crisis reaching the headlines. And there are several reasons for that. You know, I think China has a number of structural challenges to its economy and to its growth model that, again, Beijing has been talking about for years. They've used the term rebalancing a number of times. I think, you know, to start with, we have the issue of opacity and inefficiency. In particular, you know, China's vast and kind of opaque financial system has long posed a threat to its own economy and the world. And the agonies of Evergrande are a reminder of how hard it is to manage those risks. You know, as the government tries to impose an orderly default, it faces the risk of contagion. And the episode, I think, highlights a bigger question of whether, you know, the efforts that we're seeing now from the government to impose discipline in the property sector and taking on regulatory actions in a number of business sectors might make it even harder to create a reformed financial system that is safer, more open, and more efficient. And those, I think, are the areas that, you know, would need to have, or those are what the government would need to strive for, in essence, to keep the growth as it is. However, candidly, China's, you know, remarkable and kind of unprecedented growth from an agrarian rural economy to global superpower in a matter of decades is unprecedented. It's simply not, it was not going to be sustainable ever anyway. You can't be operating at 10% GDP growth year after year after year. At some point, it gives out. What I do expect will happen in the property sector is, you know, it's been overheated for a long time. People have talked about it as a bubble, and when is the bubble going to burst? And that was being said, you know, 8 years ago, 10 years ago, 5 years ago, 3 years ago. What we're seeing now is perhaps not a burst, but maybe the balloon will slowly deflate. And that does also open up opportunities for China to think about how that growth in the economy can be met with other sectors.
Well, before we go now, Evergrande's $300 billion debt, it's drawn a lot of attention to its local government financing vehicles. And while China has, you know, it's tinkled up around $8.2 trillion in these financing vehicles, and that amounts to roughly 52% of its GDP, according to Goldman Sachs. Others have put it higher. But how severe is China's debt problem at the moment?
It's a severe problem, and I would again point to, you know, the Evergrande crisis shows the importance of kind of deeper financial reforms for China. The question is, what might they look like? You know, liberal reformers have, you know, long spoken of a cleanup of these bad debts, a loosening of controls over prices, which would include the exchange rate, transparency and independent courts that enforce property rights. And China has made progress in some of those areas. You know, a system along those lines might allocate capital better and be less prey to moral hazard, which is essentially the Evergrande challenge. And, you know, to be fair, also, you know, the government regime currently helps financial stability in many ways. Mr. Xi has long seen excessive borrowing as a security risk, which is partially what prompted the reform and the limits placed on the property develops. And that might also kind of somber debt-hungry businessmen into being more cautious. And the centralization of power might make it easier to control risks at sprawling organizations such as Evergrande and other companies if the government were to undertake some of these key reforms. So I think, we are seeing now a kind of broad agenda to reassert control over the economy, information flows, courts and regulators. That presents some challenges, though, for financial reforms. If you're an observer of history, economists would tell you that to achieve kind of the final phase of growth, to kind of pass into the rich country club, you need to liberalize your economy in certain key ways that China has not yet done. However, if we've learned anything from China over the last few decades, is that it never ceases to surprise us. I mean, there are still obligations that were made in China's accession to the WTO that haven't been met. And there was a kind of global consensus at some point around that time that once China, was in the words of the Chinese, aligned with the world in the WTO, it would, liberalize its economy and come in line with market norms, then that hasn't happened. So forgive this long answer, but I guess in summary, the challenges are real, and we don't really know how they will happen. But I think we should never underestimate China's ability to find creative and unique ways to address its challenges.
The Chinese economy certainly is dynamic in many ways, and there's a lot more to watch out for. Well, this is all we have time for today, I'm afraid, but that was Mattie Bekink, China Director of the Economist Corporate Network. Thank you again so much for your time today.
Thank you for having me.